This is Kitco News special coverage of the Future Minerals Forum.
Hello and welcome to Kitco Mining's coverage of the Future Minerals Forum from Riyadh in Saudi Arabia. Joining me today is Tom Palmer, President and CEO of Newmont. Tom, welcome back to Kitco.
Thank you. Happy New Year to you.
Happy New Year, Tom. It's a very happy New Year for Newmont. A good start to the year. You've been completing a divestiture program that's gone very successfully. But before we get to that, we're at the Future Minerals Forum. How has the event been for you? How's the vibe? What's been of most interest to you here?
It's been it's my first time here. We're a little bit busy this time last year. JB just closed the Newcrest acquisition, so we weren't able to make it here. It is amazing the number of people here, the presence here for a conference that's only 2 or 3 years old. It is clearly found its space, and the opportunity to meet and engage with other mining companies, with suppliers, with customers, and the level of government participation here. Truly an amazing venue, and I think it's firmly on the map of conferences for mining companies to get to.
It is truly an impressive event. They say they've got over 20,000 delegates here. It's absolutely amazing. To what extent do you think it signals that the balance of power in mineral financing is perhaps tilting away from North America to this part of the world or elsewhere?
I probably look at it less as a balance of power tilting away. I think as we think about the world going through the energy transition, the metals that are going to need to supply that different sources of funding, different partnerships are an important part of solving that equation. And I think it just brings not a new player because they've been around for a while, but another player, another dynamic to some of the more traditional forms of financing or partnership within the mining industry.
Okay, let's talk more about Newmont and your performance last year. Newmont is the gold sector leader in terms of production, in terms of market capitalization, but I think it's fair to say your performance has been pretty sort of middle of the road. 2024, however, was a year of change for the company with a successful divestment program. You've divested 6 assets now, raised at least $3.9 billion. You were looking to raise a lot less than that, so I imagine you're very happy with how that's gone. And towards the end of the year, you announced a senior management overhaul. In what shape is Newmont today compared to a year ago?
Yeah, really important year for Newmont in 2024. We closed the Newcrest acquisition, one of the largest acquisitions in the mining industry, not just the gold mining industry. So a significant undertaking. 2024 was a year of integration, rationalization, and transition to our go-forward portfolio. So it's been a year of transforming Newmont to the go-forward portfolio that we saw consistent with our strategy when we embarked upon a conversation with Newcrest. Integration's gone exceptionally well. All the lessons we learnt 5 or 6 years ago from our acquisition of Goldcorp, we were able to apply 4 new operations firmly embedded in the Newmont operation, and then in Newmont leadership, Newmont culture firmly in place in those new operations. We're ahead in terms of our synergies. At a flat gold price, we met our synergy targets a year ahead of schedule. So that's a really important component of 2024. An ambitious divestment program, 6 assets we declared as assets held for divestment. So we embarked upon an ambitious divestment program, gone very, very well. You quoted the numbers. 1 more to go in terms of that program, our Porcupine operation, and we're working our way through that process. But that allows us, knowing that we've got full fair value for those assets, they're going into hands of companies that will be able to take those operations to their next chapter in their life, allows us to focus on 11 managed operations and 3 projects in execution going forward into 2025 and beyond, and to shape our leadership team, our management team, to support that smaller portfolio of operations going forward. So we tweaked our management structure to support that now that we had the confidence of that divestment program behind us.
I think a lot of people were pleasantly surprised at the amount you were able to realise from the divestitures, which, as we discussed before coming on air, is perhaps highlights the quality of the assets that you were divesting, plus also the paucity of assets out there in general for people that are interested in growth. To what extent or not will some of those benefits be reflected in your 2024 results, which will be coming out in a few weeks' time?
It's certainly what we'd see, what will be pretty consistent in terms of how we use those proceeds. So we talked about our balance sheet settings, that we're We're looking to have about $8 billion of debt, $3 billion of cash, and $5 billion of net debt that comes from that. So we'll continue to work towards hitting those settings for our balance sheet, and then maintaining a competitive dividend, base dividend, our dollar per share, and then any additional cash that we're generating from our operating assets, plus those proceeds, we would return to shareholders through a share buyback program. And we announced late last year that we'd increased that share buyback program to $3 billion. So pretty clear what we're going to do with the cash we're generating, and also the proceeds coming in from those divestments. What that program allows us to do is get after our go-forward portfolio. So whereas 2024 was a year of integration, rationalisation and transition, our focus in 2025 is on safety, cost and productivity. So really starting to demonstrate the strength of this portfolio we've assembled, and to look to grow margins through a focus on safety, cost and productivity.
I'm glad you mentioned margins. With the divestitures and the management overhaul, you've got let's say a slimmer, fitter Newmont going forward. What impact we expect to see on the company's all-in sustaining cost and all-in sustaining cost margin as a result of these changes?
Yeah. Our all-in sustaining costs are higher than we like them, so we've got work to do in that space. We're not happy with the all-in sustaining costs that we're seeing at the moment and what we indicated for 2025 late last year. We are going through a process of reconfiguring our business. So the new assets that we've brought in, they're very long life assets. So we're making sure that we're setting up a Lihir or a Cadia or a Brucejack for the long term. There's a little bit of investment that comes with that in order to ensure that we are growing margins from those operations within a balanced portfolio over time. Goldman Sachs initiated coverage on Newmont just in the last couple of days, and I think they did a beautiful job of describing our equity story as they initiated coverage. That's really important work that we're getting after. So a little bit of investment in the early years to ensure those operations deliver value over the long term and to grow margins over the long term. The other important part of the Newmont story is we're investing in laybacks at our big mines in Boddington and Penasquito. So we're in lower grades, but we swing back into higher grades in the next 2 or 3 years that will bring our costs down. We're building a new mine in Ghana, Ahafo North. That's coming up out of the ground right now. First gold is on schedule for later this year. New lower cost ounces come into our business from that. Panel Cave 2-3 at the Cadia operation. We reached its hydraulic limit last year, so it's now caving. As that mine comes on next year and this year and into next year, we start to see better grades of gold and copper come through. And the shaft at Tanami and the expansion underground of the crushing and conveying infrastructure, that investment we're making there will start to bring more ounces at lower cost in 2 or 3 years' time. So number of investments we're making in our business today will improve our cost profile, improve our margins over the medium and long term.
Do you see a possibility of getting your all-in sustaining cost down to, let's say, $1,000 an ounce?
That's a big step down from where we sit today. We certainly see the opportunity, cost, productivity, and the return on those investments to get at least a couple $100 out of our cost base in today's dollars. So we're not happy with where we sit today, and we're looking to get after that to get our costs down. A portfolio of our strength, we expect to be first quartile, wherever that number is. So that's what we're focusing on getting after.
Okay, Newmont for many years has been the US gold company, but as part of your divestiture program, you sold the Cripple Creek and Victor operations in Colorado, where you're based, where you're headquartered. And so now your only US production is from Nevada Gold Mines, in which you're the junior partner. Is that an issue for Newmont shareholders? I suppose it's all relative because the United States will have a new president next week and is perhaps looking at making Canada the 51st state, in which case you will have US production.
Yeah, that might be a little bit a bridge too far, but it's not dissimilar to where Newmont's been for the last 5 or 6 years. Cripple Creek and Victor's been our only managed operation in the United States. We're domiciled in the United States. We're 104 years old. It's firmly part of who we are. We've been a international mining company for a long time. Our focus is on ensuring that we've got a balanced, diversified portfolio of tier one operations in some of the best mining jurisdictions in the world. The fact that we don't manage an operation in the United States is not an issue for us. Our strategy has three components that informed our discussions with Newcrest a couple of years ago. One was to have a solid foundation of tier one operations in the United States, Canada and Australia, a foundation upon which we can then have a balanced portfolio of operations in some other jurisdictions. So we've got plenty of operations in Australia, plenty of operations in Canada that we manage, and a significant component, 20% of our gold production comes out of Nevada gold mines. So still, the United States is a firm part of our portfolio. Second component is we believe that we can run tier one operations as well as better than anyone else. So we're going to focus on demonstrating that with our go-forward portfolio. And the third part of our strategy is we're a gold mining company, but gold and copper come together many, many times. Geology, geography, and technology. And as we build out this portfolio, as we bring on our organic project pipeline, what I would say is the envy of the mining industry in terms of the gold and copper there, we'll grow that copper over time and increase our exposure to copper.
Now, earlier in our conversation, Tom, you spoke about your plans for the use of proceeds. Could that potentially include acquiring other assets? You mentioned your pipeline, but could there be other opportunities out there that you're now cashed up and able to take advantage of?
We're very clear on where we sit as a business. We have just done a major transaction. We have assembled the best portfolio of tier one gold assets in the industry, and we're about demonstrating the value that comes from that set of operating assets, and then starting to look at how we bring on and shape and develop the 6 big projects we have in our pipeline. That's our sole focus.
So you're happy for now, you're good for now. Okay, as 2025 gets underway, how do you see the setup for gold and for gold companies?
I think gold price, you certainly see the current gold levels that we're seeing at the moment. Lots of reasons why you'd expect to see that gold price level maintained, but maybe go a bit higher. So lots of reasons for why gold price is where it is and likely to stay there. I think the real challenge for Newmont, the real challenge for the gold mining industry is demonstrating that we can manage our costs, manage our productivities, and generate a sustainable margin to that gold price. I think you're seeing a disconnect between gold equities and the gold price, and we need to demonstrate that we can manage our business well, deliver good returns, and deliver value for our shareholders. That's key focus for us in 2025.
To what extent, you touched on a very important point there, I think, Tom, which I think is overhanging the sector. The gold price has gone up a lot. Investors expect, the gold price has gone up, the margins must have gone up a lot, but they haven't. Is that something that's really holding the sector back, the inability to control costs or expand margins?
Well, you certainly see that the drivers of gold price often drive the cost of a business, so you can see that margin compression that comes. So you're seeing, I think, as from an industry, you're starting to see, you are seeing that dynamic play out. What we have assembled within our Newmont portfolio, with a portfolio that is exclusively tier one operations, is a set of operations that should be able to be resistant to some of those traditional pressures. We're in the process, we've just been through a process of integration, divestment and transition. We're now configuring a portfolio so that we can demonstrate that margin resilience over time. But the onus is on us in 2025 to prove the point.
Now, you've just gone through a process of change. With a bit of luck and assuming business goes to plan, where do you want Newmont to be by the end of this year?
The end of 2025, we want to have safely divested the operation. So we've made announcements, but we're going to now hand them safely over to their new owners. That's an important part of this year. Zero fatalities is an important part of our scorecard for this year. Really focusing on ensuring that we've got the right leadership behaviour, the right safety environment, for the 40,000 people that work at Newmont to come to work and be confident they go safely home to their families at the end of a day or a shift or rotations time at the office. We've got some big projects we're developing. We want to hit some important milestones, a Halfland North first gold, continuing to develop the draw points at Cadia, continuing to hit some key milestones at the Tanami expansion project. Really important year to bring those projects on and to deliver on our commitments around safety, as already mentioned, cost and productivity. So just delivering on what we said we're going to do in 2025, completing our divestments, delivering on our projects, and delivering on our operating performance is our focus issue.
Well, Tom, I wish you the best of luck with that. Tom Palmer, thank you very much for joining us today.
Thank you.
Stay tuned for more from the Future Minerals Forum in Riyadh, in Saudi Arabia. I'm Paul Harris, and this is Kitco Mining.
This is Kitco News special coverage of the Future Minerals Forum.